I respectfully disagree with you because I'm the exact opposite.
It's going to go to 7,000. It's going to go to 10,000. I'm actually one of those people.
Usually, when you get comments like this, you know that the market, is becoming overheated.
I think gold is having its Bitcoin 2017 moment.
I'm just trying to look at the markets objectively and look at what the charts are telling me.
If I've improved in the last decade and a half, it's
Mhm.
because there's the ever present threat of somebody saying, that's complete rubbish.
Overbought conditions in 2006 with acceleration extreme. Then we had a pullback. Overbought condition 2008 with acceleration extreme and RSI, of course. We had a pullback.
I'm going to go for the this time it's different, which is not a great percentage thing to do, but
I become much more confident in this particular view I have about social media is that the more I can enrage my audience, the more I know I'm on the right track. So I actually welcome it when people attack me and when people criticize the analyst.
I always said to myself, gold gets through 2000, after being in a range for
Mhm.
2 decades or whatever it was, do not get caught on the wrong side of that.
All right, guys, hello and welcome. We're honored to have our special guest. And indeed, he's my good friend and trader, Zak Mir. Zak Mir, by the way, he's by far one of the best technical analysts out there. Many years ago, in fact, he wrote some interesting books and very good books on technical analysis. And he has a tremendous wealth of experience when it comes to the markets. Indeed, gold, Bitcoin. He himself is a very passionate investor and trader in Bitcoin and crypto, as well as other markets. But in this particular video, I want to talk with Zak about the chart of gold. What does Zak make of what's happening on gold, the metal? Is he bullish or is he rather bearish? We'll discuss this in this particular video. All right, guys, join us. Okay, welcome back. Zak, how are you, by the way? Before we go on to the chart of gold, how are you? You good?
As good as gold, yeah.
Okay, great. By the way, Zak, I mean, you've written about technical analysis. We were talking with you about this, but something interesting you mentioned, if you just want to cover it very briefly, is that what typically happens, I want to actually talk about this with gold, is that typically whenever markets explode and they go parabolic, or the opposite, they can decline and sharply drop, like what happened in the stock market. So usually at these extremes of momentum, you see a lot of herding in social, in social media. And something you mentioned to me is that often people if you say something which goes against the majority opinion, so when everybody's extremely scared and you're bullish, you're the only one who's bullish, people often will attack you on X, on Twitter or on social media. And the opposite occurs. When markets explode and go higher and someone says, no, I think there's going to be risk ahead, there might be a correction. Again, you'll see a lot of people piling on you and attacking you on social media. Is that something you experience as well on X? By the way, guys, make sure you do follow Zak on his Twitter feed, on his X feed. Go to @Zak's Traders Cafe. A tremendous amount of great material that Zak publishes there. Do check it out. I'll put the link in the description. Zak, go ahead.
Yeah, no, the one of the reasons I think that we're doing this 35 years, but the
Mhm.
social media age is like the last 15, 16 years. And actually having the potential of people sending you messages with four-letter words in them is a very good way of focusing your mind and
Yeah.
making sure that you do your best to get it right. So that's a sort of, I think that's one of the things that's I've improved in the last decade and a half, it's
Mhm.
because there's the ever present threat of somebody saying, that's complete rubbish. I mean, obviously,
I don't.
now and
Do you
again,
see it as a threat? You see it as a threat because I think a lot of these guys, honestly, are. I prefer not to even care what they think.
well, no, I'm a very sort of caring human being, so I care about what people think of me and everything. I want to be loved and adored.
Oh, do you?
So that's the thing, and I like to be thought of as the best in town. So in my work, I try and come up with the best calls and say like I think the S&P's topped out or the gold's done this, and I hope it'll be right. And if I say gold will be 34 by the end of next month, and and it gets there, I feel I have a warm feeling inside, and if it doesn't, then I have a not so warm feeling inside. But I'm just saying, like for instance, on gold, 3,400. I said, like last month, it's in March, I was saying, it's March the 20th, the March the 15th. By the end of next month, it's 3,000 now, 3,100 now, go to 3,400 by the end of next month, and when it does that, that is that's job satisfaction.
I guess in this aspect, I respectfully disagree with you because I'm the exact opposite. My personality is different in the sense. You're too kind. You're a very kind guy. I can see that. You care too much about what people think about your view or your opinion. I'm the view. I am actually with the opinion. In fact, I've become much more confident in this particular view I have about social media is that the more I can enrage my audience, the more I know I'm on the right track. So I actually welcome it when people attack me and when people criticize the analyst. So when people attack me and they say, no, you're wrong, that's beautiful. It's perfect because it tells me I'm probably onto something. Because the
Yeah, no,
majority opinion, because the herd view, the herd mentality view, that they think that they're right. And I'm just trying to look at the markets objectively and look at what the charts are telling me.
yeah, the heckle the heckle you get, like Tesla's going to 300 or it's doing this or it's doing that, and somebody says, "Oh no, Tesla's rubbish. It's Elon Musk is finished," or something
Yeah,
like that.
I've seen view talks like that. Yeah.
It's always a buy. Whenever they're always there. I mean, it's like I would say 99.9% the heckler is always wrong. So
Yeah.
if you write about stock, if you write about a stock and you get heckled, you know that it's they sort of say, "Oh, it's rubbish." You know it's a buy. I mean,
Yeah.
it's baked. I don't know how it happens. I don't know who these people are. I mean, they're geniuses. They're opposite geniuses, and it works really well. So I do. There's a crossover in that if there is a troll or a heckler, they're normally inversely spot on.
Let's continue with the charts, guys, Zach, because I know you're pressed for time. So, Zach, what happened was I mentioned some weeks ago that I thought gold was going to have a correction. Now, of course, it went slightly beyond my expectation. It went by 6% higher than where I thought we might start a correction. But I got some of these comments. Look at this. People saying gold will go to 5,280 by year end. Gold will go to 4K this summer. Gold goes 7,000, 14,000. I mean, you can see these comments right over here. Usually when you get comments like this, you know that the market, is becoming overheated. You're getting a lot of, again, the herd just joining in. But as I
Yeah.
explained as I explained a few weeks ago, I said, look, in the past, whenever gold becomes so this is a chart of gold in 2020. In that year, gold became parabolic, went beyond 2 standard deviation, and we had RSI 34 setting, extremely overbought with acceleration extremes. That was a major indication of risk. And look what happened. Gold then dropped, as we can see there on the chart. Let me get my pen. Major correction down to the 21 or 34 moving averages. That's after the overbought conditions on RSI and indeed on the acceleration extreme. Then I showed this chart, this one here, 2006, 2008, very similar situation here. Overbought conditions in 2006 with acceleration extreme. Then we had a pullback. Overbought condition 2008 with acceleration extreme and RSI, of course, we had a pullback. And notice each time the market, then gold, pulled back to the 21 EMA and sometimes the 34 EMA. Here again, 21 EMA and the 34 EMA in 2008. Okay. By the way, every single time you had fundamentalists on social media saying, no, the fundamentals are going to be pushing gold to 5,000 or things like that. This is 2011. This is a monthly chart. Look at this. We had in 2011, we can see we had gold going parabolic again, right about there. And look what happened. Just before it hit 1900 or just under 2000, again, RSI overbought, and you had acceleration extreme, and then we can see what happened over the next several weeks. Pull back to the 21, and then eventually it fell by 45% from 2011 to indeed significantly lower by 2015. Okay, the reason I'm showing this is because there are some exceptions as well. There was one exception here, at least a couple of exceptions. In the 70s, there was an exception. So in the 1970s, the market ignored overbought conditions. So despite all the overbought conditions on the RSI, on the acceleration extreme, the market, again, gold just exploded higher. So I'm not saying every single time it's going to work out that way. There are exceptions. Like in the late 70s, we had situations when gold just did the opposite. It ignored overbought conditions. It went higher, but yet eventually gold did eventually fall. After 1980, it then dropped quite severely down, as we can see there. Zach, I guess my question is this. Are we in a situation like 2006, 2008, 2011, or 2020, where you had overbought conditions similar to now, and then the risk of a pullback or correction increases? Like I think gold could drop down to 3,000 in the next several weeks, potentially even down to 2,900, 2,830, maybe, I think. Quite a heavy correction is what I'm looking for. Or do you think this is a situation like the 1970s where we could just explode higher and maybe go to 3,600, 3,700, maybe to 4,000? Which is your view? I'm more of the view that we're seeing a correction as long as we stay below 3,500, the recent high. And yes, I do realize, guys, I do realize that gold went slightly higher than what I expected. It went about 6% higher than what I anticipated. So I wasn't trying to call a top in my last video. What I was trying to explain was there was a high risk of a potential correction or a pullback, which is still what I'm expecting. But Zach, what is your view?
I'm going to go for the this time it's different, which is not a great percentage thing to do, but this time it's different. Waited a decade and got old waiting for the big breakout in gold. It was in a range between, let's say, 1,200 or and 2,000 or 2,200. Once the log jam is broken, I think that it's caught people out. They're probably relying on gold being in, near to $2,000 or 1,500, $2,000. It's not, I think it's going to be doing a kind of Bitcoin 2017 move, and I mean, which is even a bit like the comments you got on you showed at the beginning of
Yeah.
the session. It's going to go to 7,000. It's going to go to 10,000. I'm actually one of those people. So
Or
probably need
you're one of the people who
yeah,
thinks,
really, really bullish on it. I think gold is having its Bitcoin 2017 moment, and on that basis, so I'm like 3,800 by the end of next month, and then maybe 5,000 by the end of the year, 10,000. It's all that. I think it's going to be a major re-rate.
so you're
Hoarding.
seeing this more like a scenario like in the 1970s where gold just ignored overbought conditions
Yeah, I
and
think it's
essentially, so you're seeing 30, so you mentioned 3,800 by next end of next month, I think you said.
the end of May, and then after. So I'm
4,000?
just yeah, I'm
Mhm,
really bullish on the whole thing.
mhm,
So, but 38, I think if it does do 3,800 by the end of next month, then I think that would be a good sign that this is this time it is different. It's a major re-rate,
mhm.
and it's going to do Bitcoin. You probably can't remember the move between 3,000 and 20,000 or whatever it did. I mean, it was that kind of move in 2017. You
Yeah.
can check that out, but. For me, the gold, I always said to myself, gold gets through 2000. It's after being in a range for
Mhm.
2 decades or whatever it was. Do not get caught on the wrong side of that. Sometimes with some markets, it's just like do not pass go, do not collect £200. Just keep going with the trend,
Yeah.
and don't even bother trying to work out. Oh, it's going to be a pullback here, pullback there, and don't
Mhm,
look for one,
mhm.
because it's like everyone's going to be caught short of that, and
Yeah,
you don't want to be.
absolutely. One of the great things I like doing in these videos is having someone like yourself, again, very knowledgeable person, and also one of the best technical analysts out there that I actually trust. I like someone who has a different opinion than mine, even though again, I respectfully, I disagree with you. I'm more of the view that we're going to see a correction. So I'm more of the view that we're going to see a correction like we had in 2020, 2006, 2008, and in 2011. So I'm more of that. Personally, I think I'm more of that. But I could be wrong. I mentioned this in my last video as well. So I could be wrong. So I'm going to say this in this video. If gold was to take out the near high that we had recently at 3,500, then that means I'm wrong. That means my view about a correction is wrong, and that means Zach is very likely correct that we're going to go to his levels, the 3,800. I think you mentioned 4,000 by the end of the year, potentially. So yeah, put it this way, guys. If gold was to take out, if gold took out and went above the recent high of 3,500, which I think at the moment I'm not expecting. I'm more of the view we're going to see a correction. So I'm more of the view we're going to see a correction down to 3,000, 3,100, and potentially maybe lower levels like 2,900 as well. That's my view potentially in the next several weeks. But if I'm wrong, and if gold takes out 3,500 or 3,500, the recent high, that means I'm wrong, and that means gold is going to see a 1970s sort of replay, or as Zach says, the Bitcoin 2017 moment when it just rallied higher parabolically to, as Zach said, 3,800 to 4,000. Would that be correct? Putting it correctly there, Zach, more or less.
Yeah, no, I think that's fair, and I just think that probably if there is any risk, it's to the upside, not to the downside. I'm mesmerized by the gold hoarding and moving around and
Yeah.
that sort of stuff like that. And then also weak dollar. And I suppose the only thing is that you know that if we do get gold at 4,000, 5,000 or whatever it is, then you might be worried that we'd all be in the trenches fighting a war rather than actually enjoying the gold price going up. But let's see.
Yeah, and the last thing I want to say here is this, and I'm saying this specifically for those trolls on social media who love to again ridicule and attack me and Zach in the comment section. I want to say this to my audience. I want to say this directly to my audience who watches my videos. I want to thank you very much, guys, for those of you, because I know many of you post great comments. I want to thank you very much for watching my videos. So I do love and I thank my audience for watching these videos. But here's what I want to say to you. The trolls out there who post all these comments attacking me and Zach, ask yourself this question. What do they actually provide in their commentary when they post comments? What do they actually say? Nothing of value. Me and Zach here are providing you facts. We're providing you data and evidence based on the charts. We're just essentially trying our best as objectively as possible to essentially interpret what the charts are saying. But what are these trolls doing? Nothing at all. They're not providing anything of value. All they're doing is ridiculing and attacking the analyst. So really, guys, I don't care what those trolls say.
Shove it up your butt.
And I don't care what those people on social media say either. Listen, if you don't like my views about gold or the markets, that's fine. I don't care. And we're human beings. We could be wrong. I could be wrong. Zach could be wrong. It doesn't matter. But we're doing our best. We're doing our best to provide a reliable and good analysis of the charts and on gold here. And in the other markets too. That's all I can say, guys. Before I forget, again, do check out Zach's Twitter feed or X feed. That's on @Zach's Traders Cafe on x.com. Go ahead, check it out. Thank you very much indeed, Zach. Really appreciate it.
Thank you.